Hello, guys. You've tuned into moneycontrol.com. I'm Manisha Gupta, and we are going to discuss about gold and silver today, where we are looking at multi-month highs in case of prices. Gold is trading at a 3-month high, silver at a 5-month highs, and the support clearly comes in from good amount of buying and the fact that the dollar index, after hitting a 20-year highs, has declined to around 3-month lows. And then you have inflation concerns as well easing off, and the markets clearly have factored in by nearly 85% of a probability that December will see the US Fed rate hike by 50 basis points. But how does it really mean, and what does it mean for the gold prices going forward? What is India buying, and how much is India buying as we get into the wedding season here? To answer all of those questions, we have with us today Mr. Surendra Mehta. He's director with IBJA. Mr. Mehta, hi, good to have you on Money Control. First of all, on the prices itself and the kind of run up that we've seen in the month of October and November, really building it up, how do you see the current prices?
Uh, when the bottom was made, 1620 or 1670 to be specific, normally the two bottoms are made before the start of the bull journey. But this time, the almost 3 to 4 bottoms were made, and that surprised even the big bullion traders and bankers, and even I was surprised because. Gold prices going below $1740 uh, and not adjusting to the rupee value was really surprising. But I think all short sellers are in difficult situation now. The gold prices are again rising, and I feel that 1739 will be a very big support level at the downside. And if it does not go below 1739, I think we will continue to look at bullish trend in the gold.
All right. The gold prices have seen a very big range in this year. I mean, as you mentioned, we've seen prices break below $1620 per ounce, and we've seen a high of $2050 an ounce on the higher side as well. What kind of strength do you foresee from here? Are we at all going back to those 1900, 2000 kind of levels in the near future?
Well, personally, if you ask me, yes, because see, we have to understand 3, 4 important factors, which you also mentioned. The dollar index after the all-time high going down again. The inflations are easing. We all know that December hike will not be beyond 50 basis point. The
Right.
bond yield is reducing. Uh, and as far as Indian market is concerned, the rupee is weakening regularly, and which is supportive for the Indian gold prices. And if you look at all other conditions, somehow I feel that the other asset class are all set to fall with the inflation now turning into a recession, maybe in 3 months time from now or 4 months time from now. Uh, because the hit of the inflation is felt only after 6 months or 7 months. That is what is normally seen. And I feel that the hedging has already started. The central banks have already started buying. The big funds have already started buying. The big high net worth individual has already started buying gold, and this is all leading to surge in the gold prices. And I think we are going to see we may cross even $2079, which was to COVID high. We might go up to $2150 or so in the
And
year.
what would that really conspire or have a calculation in the Indian markets then?
If I consider 80 rupees as the rupee dollar rate, then I think it should be somewhere near 63,000 with 15% duty in existence.
Okay. This is one thing that gets keep talking about in the last fortnight or so, or about 32 lakh weddings in the Indian markets from November until Feb. How much of a gold buying are we really looking at in these 3 or 4 months?
Very true. There is a CAT report which also says that there will be huge buying across all the sectors due to the wedding 32 lakhs wedding in this wedding season. I personally feel that the gold demand will continue to remain as it is as far as wedding demand is concerned, but regular demand will fall a bit because of the rise in the gold prices. If you ask me, we might see a correction of about 7% overall in the gold demand. The gold demand might reduce because the regular buying is likely to reduce by about 10 to 12%. So overall, we may see 7% less demand in the next quarter. Uh, but if you ask me future of gold, I want to share a very important thing with you. What was the gold prices 20 years back? 20 years back, gold were priced at only 4,500 rupees for 10 gram. Today it is 50,000 rupees for 10 gram.
Right.
So in year 2000, if somebody would have forecasted that gold can become 50,000, he would be called the foolish analyst. So I still say that look at 20 years horizon or 30 years horizon, the gold prices are likely to cross beyond your imagination. Don't take gold lightly, because after COVID, we all have seen how important gold is when you really want to hedge the other asset class.
All right. So, I mean, as you said, this quarter might see a decline in demand. That is because the gold prices have run up so much. In the month of November itself, we've seen 5 to 6% of a jump up coming in for gold prices. But when, I mean, all the things that we discussed for an investor, for somebody who's making a financial portfolio, are these prices nicer, better even now to get in?
Uh, well, yes, but if you see, they should really plan it out. It all depends. What are they looking for the investment for a shorter period or for a longer period? If they are looking for an investment in short period, they should apply the stop loss very clearly. But if you are looking for an investment, say for 5 years or 10 years or 15-year horizon or 20-year horizon, then they need not worry. Keep buying gold on an SIP methods, and I think that is the one of the best investment at least India can have, because of continuously falling rupee. In spite of fact that dollar is also weakening, but our rupee keeps falling because of the various factors such as crude demand and all. And if, when I look at some of the analysts for the crude, they are also saying that crude prices are likely to increase. So if crude prices are likely to increase, then gold prices will definitely increase. There is no
All
doubt
right.
about it.
So, a lot of investors, a lot of households, a lot of millennials are buying gold now as well. A lot of people are investing in various asset classes, including gold. Uh, for a 3 months perspective, for a 6 months perspective, what is the avenue that you would advise for buying gold, and what are the targets that you would put out?
If you want to flaunt with your gold jewelry, gold, please buy jewelry. Make your nears and dears one happy. But if you really want to invest, then a sovereign gold bond will be a good investment. But unfortunately, the Reserve Bank of India has not announced the next tranche of sovereign gold bond. But still, you can try and buy sovereign gold bond from the exchange. That is one option. Second option is ETF, and third option is of course digital gold, and physical gold buying also. But there, in digital gold and physical gold buying, you eventually lose out to GST, so that is a big loss. So I think ETF and sovereign gold bond are better investment. If we don't want to opt them, opt for digital gold or physical gold in bullion form or coin form.
Over the years, we've seen initially people would tell you that gold should perhaps be 5 to 7% of your portfolio. In the last couple of years, we've seen that number go up to 10, 12, 15% as well. What are you suggesting?
If you are staying in rural India, go for at least 20%. If you are not staying in rural India, then the investment in gold should be at least 15% of your portfolio. See why I'm saying, because ample opportunities are available in amongst the urban population, amongst the big cities. They are access to investing in stock market. Of course, in rural area also, they have an access to investing in stock market. But I feel they don't get proper advice there. So it all depends. They can yeah, like farmers and rural people, they can just encash the gold whenever they want it, and it will be difficult for them to encash the other assets. So I feel that on an average in India, you must have a gold between 15 to 20%. Depends whether it is rural India or urban.
Mr. Mehta, markets are slightly not confirmed, confused rather, even concerned for that matter, that by the time you have the interest rate date in the month of December, there will be volatility in case of gold yet again. Keeping that event in mind, how is the next 1 month now looking to you in sense of gold as a range?
See, gold will always be volatile. Whenever these interest rates or any event will happen, gold will become volatile at least for that particular week or maybe a 10-day horizon. But then it will again come back to the same level. Only in the last 2.5 months, what we have seen is gold have been continuously falling and not correcting. But that has not been the case, not been the scenario. See, we have to also look at the gold mining cost, other operational cost. So all this cost, I think 16, $17 was the cheapest gold available I could see, because the mining cost itself now comes to the new mining cost comes to almost $1450 or $1500. So
Okay.
so if you consider all these aspects, I think 16, 17 was a good price to buy. But in Indian market, as I said, any price is a good price to buy, because we are continuously going to see a rupee falling irrespective of anything.
Oh, we have seen that in the last many, many years. So whichever direction you go, gold should
If
be in
you
your
if you
portfolio.
if you look at 2019, in 2019 rupee was 71, in 2022 rupee is to the almost 83. So it is almost up by 20%. So gold prices have already gone up by 20% only because of fall in the rupee.
Rupee depreciation, right?
Yes, yes.
All right, so that's the view coming in from the expert. But I should have gold on your portfolio, expected to go again higher. The directional is still on the bullish side here, on the positive side here. So, of course, you could have bought it on the dips, but these are not loss levels as well. Buying gold for a longer term, 3 to 5 years horizon, is always a better way to do it. Mr. Mehta, as always, thank you so much for joining us and giving us a sense on the gold prices, demand, fundamentals, and of course, on what to expect in the next few years as well. Thank you so much for watching.
Thank you. Thank you.